Hello everyone, this is Jeb Hamwerger from goldstocktrades.com, and it's Friday, March 30th, 2012. We're ending the first quarter of 2012, and I wanted to review some of our precious metals, the gold miners, the uranium, and the rare earth miners, in relation to the overall general equity markets. Last year, we saw at the end of QE2 in April, we saw a major decline in the markets as investors were concerned of deflationary risks, the debt ceiling debates in Washington, the euro crisis. So we had a steep decline, and then in October we saw a very powerful reversal and the beginning of a risk-on rally. And at that time we saw massive printing of dollars in Europe, the long-term refinancing option, and the European bailouts of Greece, Portugal, Italy, and Spain. We saw a massive amount of liquidity movements, and we saw a move into U.S. equities, a very powerful move into U.S. equities, but it's only amongst very select sectors, and it has not been a broad-based rally. It has been on decreasing volume, which indicates to me that there may be some sort of reluctance of buying and a fear of further printing. So investors have gone into U.S. equities as a hedge, and before that we saw a massive move into dollars and treasuries. Now we're seeing this massive move into U.S. equities, especially housing and financials, which we are not 100% confident that we've seen a full recovery in these two sectors, especially amongst the loans and all the problems that have been caused recently in the global markets. I do not think that that is ending. I think that debt fears are still a concern, and that wealth in the earth, assets and precious metals, are right now very undervalued and may be presenting a buying opportunity. As we've been saying for a while, gold is pulling up to its long-term support. We've seen a consolidation since August. Actually, September, we tested that top. So for September, October, November, December, January, February, and March, 8 months, we've been in this sort of consolidation period, and we've created this sort of in reverse head and shoulders, and we broke the downtrend in January, and now we've kind of consolidated in February and March, and we think that this area may be a strong area of support, and where we may be witnessing a reversal soon, as what we're witnessing in the markets is constant printing of money. This is going to eventually impact the precious metals and the miners. The miners are significantly undervalued and out of favor, especially the large miners, and we're actually hitting new 52-week lows. And while the markets, and especially the weak toxic sectors of housing and financials, are hitting new 52-week highs. So we have a market that's really out of whack, because the miners, especially the large miners, have been reporting excellent profits and increasing margins with the rising gold price. So we see this as a potential low, and we're seeing a declining wedge. And we have to remember, over time, the miners, which are one of the best performing sectors over the past decade, and this rare divergence where the miners are even out of favor amongst precious metals investors, and this undervaluation and underperforming of gold bullion, is creating really an opportunity for long-term buy and hold mining investors, a time to add positions at really significantly undervalued levels. And we see the formation of a declining wedge pattern and an eventual breakout, and the gold miners will continue to follow its long-term trend. With the rare earths and uranium, we are also seeing bottoming formations and have clearly not broken out yet, but we expect in 2012 to see an exciting year in both the uranium and rare earths.